Rohr here with an early global view on Wednesday, September 16th, 2015. It is currently 7:45 a.m., which is a bit later than usual, but we wanted to see the US CPI release, which was about as weak as expected prior to putting out today's video, because that's one of the more important data sets prior to tomorrow afternoon's FOMC announcement, projections revisions, and ultimately Janet Yellen's press conference. And ultimately, a lot of the other data has been weaker once again across the board. So, what does all this mean to the markets? Well, it seems there might be a little bit of a sense of bad news is good news in the equities these days once again, which we have seen time to time historically. We have the S&P 500 30-minute chart on the, hourly chart on the left, 30-minute on the right. And what we had was a market that came in from the end of last week, going back out to the 11th, that closed right at the bottom of the major downward gap from several weeks ago on the Chinese currency revaluation, when it gapped down from a close at 1970, already well off areas have been trading up into the mid to upper 2000s and the low 2100 area, gapped down from a close at around 1970 down to a high of 1950. So 1950 to 1970 is the key gap area the market was dealing with. And after closing right at the 1950 area at the end of last week, it weakened off a bit on Monday, but then early yesterday in the first hour it was back above 1950, and lo and behold, no surprises, it ran up to around 1970. Currently trading today at off $1.50, 1,968.50. So it's just off a bit, and whether it can push above 70 is going to be important. If it can, then the higher resistances get back down to some higher highs here that were around the 81.5 area. However, this is trading almost $10 below the lead contract, and the actual lead contract resistance, where it ranged up to on the recoveries after that disastrous start several weeks ago, it stalled into something more like 1990. Has additional resistance up in the 2000 area, some interim resistance, and the bigger resistance is up into the weekly chart down break up at 2015 or so. Of course, if it sets back, the support is right back in the 1950 and lower levels that get down into 1930 or so. And in fact, the bigger interim level historically on the lead contract has been about 1920. Now, the one other thing we'll say is on current form, both the hourly and the 30-minute MACDs are out above their upper runaway band. So even though this market is stalled at 1970 area for now, burden of proof is on the bears to put it back under pressure to diffuse some of the upside momentum. And that pretty much does it for the short-term view of the S&P 500.